Hello, my name is Greg Gagne, and I'd like to spend a few minutes talking to you about a crucial insurance coverage called long-term care insurance. This year, over 7,900 people will turn age 60 each and every day. With advances in medicine, people are living longer and longer today. That means the odds that you may need some form of long-term care during your lifetime are becoming greater and greater. Whether it's care provided at home by a home health aide, or services provided in an assisted living facility, or even a nursing home, the chances of a person needing long-term care services at some point in their life now stands at greater than 60%. In 2000, 10 million Americans needed long-term care. And it's not just older people who need assistance. Of the 10 million, 63% were above age 65, but 37%, almost 4 million, people were younger than that. So the probability of needing care is very high, and the financial consequences of not protecting yourself can be devastating, as you will learn in a few moments. To give you a sense of just how expensive long-term care services can be, full-time nursing home care averages more than $60,000 per year, and even part-time in-home care can cost $20,000 to $30,000 annually. In many parts of the country, these costs can be much, much higher. At this point, you may be thinking to yourself, okay, the chances of needing care are high and the costs are astronomical, but won't my health insurance or the government help pay for these sorts of services? The short answer is no and not really. Health insurance really only pays for doctor and hospital bills and maybe your prescription costs. In Medicare, the federal government's health insurance program for older Americans only covers short-term rehabilitative care that you receive after being hospitalized for at least 3 days. Medicaid, on the other hand, does pay for long-term care services. But it's a fallback option you really should plan to avoid. Medicaid will only pay for care if you have very limited assets and you meet federal poverty guidelines. Moreover, having Medicaid pay for your care also means you may not have much of a say in choosing the facility that will provide you your care. For all these reasons, long-term care insurance is something you should seriously consider. So what exactly is long-term care insurance? Well, it's a type of health insurance that will pay for long-term care services, provided that the conditions of the insurance policy are met. Depending on the policy, payment can be for as little as 2 years or as long as a lifetime. The insurance can pay anywhere from a minimal amount of benefits all the way to $500 per day. The better contracts come with an inflation rider, which means that the policy benefit will rise each year. And the better policies include payments for home health care, assisted living, and nursing home care. Since long-term care insurance decreases people's reliance on Medicaid, the government is enacting policies to encourage people to purchase long-term care insurance. Premiums of certain long-term care insurance policies are actually tax deductible. A very important issue with long-term care insurance is understanding when a policy will pay. With some types of insurance, like life insurance, it's pretty black and white. You're either dead or alive. With long-term care insurance, it's a little more gray. Individuals need long-term care when a chronic condition, trauma, or illness affect their ability to carry out basic self-care functions in life, known as activities of daily living, or ADLs. For most major insurance companies, if the policyholder can't perform 2 of these ADLs, the policy will enter a payout mode. ADLs include eating, bathing, dressing, using a bathroom, continence, and transferring from one place to another, like getting in and out of a bed or getting up and down from a chair. Before making any payments, insurance companies will usually require a physician to certify in a written report that his or her patient is unable to perform at least 2 of these ADLs. There are many factors that need to be considered when researching a purchase of long-term care insurance. These include your age. The older you are, the more expensive the policy will be to purchase. Purchasing this insurance at a younger age may save thousands of dollars in premium payments versus waiting until your retirement years to make the purchase. Benefit amount. This is the amount of coverage the policy will pay per day or per month. The higher the benefit amount, the higher the cost of coverage. Elimination period. This is the amount of time required before the policy will begin making payments. And most policies have 0, 90, 120, or even 180-day elimination periods. The longer you're willing to wait before benefits begin, the cheaper the premiums will be for your policy. Length of benefit. This is how long the policy will make payments for once they commence. Most policies will pay for as little as 1 year and as much as a lifetime. Inflation protection. Will today's selected benefit keep pace with the future need? Generally, most companies offer either a 5% compound or 5% simple inflation. Now I'd like to finish up by telling you a story of what can happen to a family's finances when long-term care planning is overlooked. I recently met with a retired couple that was pretty savvy about financial matters, but they had never carefully considered the issue of long-term care and how they'd pay for the care if it was ever needed. They had an advisor who was doing a fine job growing the husband's IRA account and making sure he had great rates of return. Unfortunately, little attention was paid to what would happen to the IRA if the husband were to become disabled and need long-term care services. In this case, he suffered a stroke and had to enter a nursing home. The monthly cost of the nursing home was over $8,000 per month. His wife was forced to liquidate his IRA to pay the monthly nursing home bill. Eventually, her husband's needs wiped out a lifetime of savings. It was tragic and simply did not need to occur. If they had purchased long-term care insurance, the insurance company would have paid the nursing home bills, she would have had peace of mind, and most importantly, she would not have had to have become impoverished. She could have used the assets of the insurance company and not her own. In this example, the couple was retired, but remember the statistics that I mentioned earlier. 37% of those needing long-term care are under age 64. You do not need to be old to need long-term care services. Bad things can happen to good people at any age. Disability, it does not discriminate. Long-term care insurance is leverage. So think of it this way. Would you be willing to leverage 1% or so of your net worth over to the insurance company in premiums and in turn protect the other 99% of your wealth? That is exactly what long-term care insurance does. It protects your assets. Thank you.